I'm Greg Hunter. Welcome to USAWatchdog.com. With us, one of the best market timing stock pickers probably in the world. He is world renowned. He is also an expert in cycles, in geopolitical and financial cycles. I'm talking about Charles Nenner. Charles Nenner, of course, has the Charles Nenner Research Center, charlesnenner.com. Charles Nenner, thanks for joining us today on USAWatchdog.com.
Well, it's nice to be back.
Good to have you back. Listen, I know you want to talk about some of the research you've done on sevens and years ending in seven, but I want to set you up by saying, you have Phil Parker and his big asset management firm. He's just closing it down, giving back people their money because he has no idea how the market's going to play out and thinks it's pretty high. We have Asher Edelman, the Gordon Gekko character, saying that plunge protection team is propping it up, and he doesn't know when they're going to pull the plug. We have Paul Singer saying, that hey, all hell is going to break loose. And then on the other side of that trade, we have Nobel Prize winner Robert Shiller, a Nobel Prize winner in economics, saying that, the market might go up 50%. So I got to tell you that we're all over the place. Where are you in what's happening with the markets? I do want to, before we let you talk, and I want to say one thing. Back in 2016, you came on my channel and said, no market crash. Market's not going to crash. 2017, the market's going to crash, and if you're not positioned correctly, you might lose everything. So can you give us an update about what you think is going on?
Well, I still think the same thing, what's going on. What's going on actually is the S&P profits are reasonably good. I don't think it's anything to do with Trump. Nobody's sure if he gets his tax plans through Congress or Senate or whatever. So nobody counts on that according to the people I know. It's just that the profits are reasonably good. Now, the couple of things that you have to look at longer term. Now, for instance, we all know that they say that the market goes up around 8% on a yearly basis. That's based on the fact that if I draw a line through the markets in a certain angle of 8% from 1900, I have that 8%. There is a mathematical equation called sigmas. You can have 1 sigma, 2 sigmas above the line. And I don't think anybody realizes how much we're above the line. So in order to get back to that 8%, we have to go much below the line. So it's the total nonsense to continue to say the markets go up 8% a year when you're already, 40, 50% above that trend line that averages 8%. Now, the other thing is that this is almost the longest bull market in history. And the third thing is I can come up with many things, that the VIX and other sentiment indicators are the same as the end of 2007. And then we go into my research of the year ending with a 7 in the 1900s and the 2000s. And if you would just go a little bit back, if this will be the top of the market in 2017, and we go back to the other year of the 7, so you get back to 2007, which was clearly a high. And if you go back to the other year of the 7 is 1997, 98, which was clearly a high. Well, 1987, everybody knows, I don't have to go into it. And go to 77, 67, 57, 47, 37. 29 was a little aberration. It should have been 27, and I still hold that because it continued up and didn't come down in the year with the 7. That's why I had this huge crash, because the cycles have to catch up. So the bottom has to come in time, even if the top comes late. So that's why I had such a huge market crash. Now, when I was at Goldman, I was giving lectures to the newcomers that came from Harvard. They always had the excuse, what if this time happens? What if they kill Obama, etc., etc.? And they used to say, listen, you guys come here, you get the huge beginning salary, and if it depends on what's going to happen in the world, we might, take the baker or the milkman on, because he can have the same insight as you. But we'll give you a huge salary and bonus because we hope that based on what you learn from the financial history, you know to project it in the future. So people have to make up their mind, if they go at random, anything can happen, or based on the past, the future repeats. Now, if you have almost 100% correlation showing you major tops in the year with a 7, so, or you're a reasonable person, say, listen, this is too much risk for me, or you're a super gambler and you say this time is different based on nothing. It's always different this time, but in the end, it all comes down to the same thing. So those are in short. I'm not talking about my cycle work that shows the same thing. I'm talking about very serious stuff. The last example I want to give is that the last bull move started in 2009, which, by the way, we got long in February, March of 2009.
The bottom.
And and if you connect all the tops since then, you see that the Dow is hanging around because it's at the top of the channel. So what you do is you make a monthly chart, quarterly chart, you connect all the tops. So you have a trend line of 8 years. And I cannot remember, or maybe it's very difficult to find a trend line of 8 years that is going to be broken. So what you do is you assume that it's not going to be broken. It goes sideways, the trend line goes up a little bit. So we can go up another 400 points on the Dow until my cycle top in September, October 2017. And then you have another thing that you say, okay, I don't trust history. I have a cycle line that connects all the tops for the last 8 years, and I don't care about that also. It's just suicidal. So I would advise people not to listen to people who have all kinds of stories, that it's not dangerous, and maybe look us up in our research, and especially in the period after the summer, to stay safe and not lose all the savings.
David Stockman says the same thing you said. He said it right here on my channel. He says, I'm predicting, and he laid out the budget and how it's going, and that he's not going to get the budget through and all this other stuff. And Stockman says, but September, November, I think we crash right in there. Does that line up with your predictions of that you think that this is the year we get a pretty hefty crash?
Yeah, but you should remember, I think it's a long-term crash, which takes about 4 years. So it's not that people who want to see it first, because a lot of people want to see first, does it really happen? So they lose 15%, it comes up a little bit. So, it seems to happen. Maybe they can still go out, not at a good price, but the low will take until 2021. So it's a long-term crash.
Do you think the bond market, Robert Shiller wasn't totally gun-ho. He did, of course, nobody wants to focus on this. He didn't like the bond market. If you listen to some of these guys on CNBC, they're telling you something without telling you something, saying that we're at unbelievably lows. One of the commenters on CNBC just yesterday was talking about how they have suppressed rates. They're way dead. They're not normal. They're not. Even Bullard was saying, well, we're not really normal. We are really not the rates we want to have. Do you think the bond market is in trouble right here, right now? Is this the top, a bubble in the bond market with rates rising from here?
Well, maybe you remember, a year and a half ago, I told everybody to go out bonds, especially out of bond funds. I said, if you own bonds, at least you get back your original capital. But if later you sell out of bond funds, you're not gonna get your money back. And if you think that inflation will not pick up and the interest rates will stay 1.5%, you must be crazy. So you're going to be stuck with bonds with inflation of usually 3-4%. Well, we go much higher soon, and the interest rates will go much easy to 3-4%. So I don't know how people think. So we got out at the top. This was a bounce, and yes, I think that now we're going lower, but.
In other words, yields. I'm sorry, I don't mean to cut you off. You're going lower. In other words, yields are going up and bond prices are going down. Correct?
Yes, but from the mid, they have a huge rally coming up together with gold. So if people want to remember something from this interview, is be very careful with stocks late 2017 and start buying bonds and gold in the middle of 2018.
So you think the gold price and the bond prices will rebound? The bond prices, interest rates will go down, gold will go up. So you're bullish on long term, at least medium term. You're bullish on gold and bonds.
Correct.
Where do you think gold's going to go from here?
Well, we always had this price target of 2,500, and we always have in the back of our mind that if they will reverse what Nixon did and the financial system is going to be so much under pressure, they go back on the gold standard. If you really calculate it, then the price of gold today should be $30,000. But for the moment, on our model, gold is a bit expensive.
Okay, all right. And then, what do you think when you said this? I don't know, a year ago or so, and said, listen, if you don't get yourself positioned correctly, you could lose everything you have. 2017 is the year. Could you go into that? Now we're in nearly halfway through 2017. Could you go into that for us and tell us what you think here in the last half of the year? What's going to happen? What's your cycle predictions?
Well, I'm afraid that they might. I have been through the 87 market. I was short the 87 market, short stocks. Almost didn't make any money because when I wanted to cover my shorts, the specialists, they just went off the floor and there was no market. And the next day, everything opened up. So it's going to be very difficult, even if you go short, if they close markets here and there to make some money. That's why I tell people, why don't you go short on different markets in the world? If they close one market, maybe the other market is open. So it's going to be a very complex situation. Like most hedge funds, even with my research that said the upside target in Dow Jones is 14,500, and I came on CNBC when I was there last the 27th of December. It says now the whole market starts 20% down, up, and don't play it. Even with my research, they all lost money because it was so hectic. You couldn't get in, you couldn't get out. So it's better not to be there because you can't play it.
And is that why some of these guys are shutting down their hedge funds and just sending people back their money? You're saying that this is going to get so hectic and so terrible that we'll have like an 87 crash where the markets just shut down? Is that what you're saying?
Well, I guess these people learned because we had the Michael Milken and we had Madoff and we have other victims. I don't say Madoff was not a victim. I think Milken was a victim because when there's a crash, the authorities don't say, oh, it had to happen. They're going to look for victims. And if you have somebody who makes money in a market that's short or loses everything he has, who knows what they're going to do to you. So politically speaking, it's better to be out of it so they cannot accuse you of any wrongdoing.
And you would be advising clients, people in the stock market, right here and right now, get out of the market now? Is that what you would be saying? Or get out of the market in August? What would you be telling people if they had a big fat stock portfolio?
Well, I think you have another 400%. But look what I just wrote a piece about AutoNation to show you how crazy the world is. I drive a Mercedes. Now I have problems with the way they treat me. And it seems that AutoNation is the owner of Mercedes in a couple of places in Florida. So you talk to these people, and nobody cares. So I look up on the website. I say, listen, if your stock went down huge till now, and I see on the social media that people write very bad things. Maybe you should try to fix it. Maybe you should try some consumer desk that you can talk to people, because I cannot talk to anything, and people might write more. And then the attitude is, and this is at the end of the bull market, you cannot threaten us. There's nothing you can say. We don't care. I says, well, you don't care. I might even go on television and say how bad this firm is. You don't care about anything. That's the end of the bull market. And that's why AutoNation comes crashing down. So usually these things happen at the end of the bull market. It didn't happen in 2002, 7, 8, when AutoNation was happy to have a stock price that was rising, when Mercedes-Benz was happy to get clients. And now if you say, listen, people are writing bad things on the social media, you should understand what's going on this time. You don't want to have this. It's like it's going to spread like crazy. It says, we don't care. We're not going to be threatened. That's the end of the bull market.
You're wanting to talk about a little social media also being politically correct, and how what you're reading in the not the financial sphere, but the geopolitical and the social sphere. What's going on that tells you that we're at the end of you're basically saying we're at the end of a bull market right now. Is that correct?
Well, I wanted to come to the comparison what happened when Rome was breaking down. These days, I think the United States is in danger. But what we discuss is what kind of toilets is going to have for men or women, whoever calls themselves whatever they are. Most Americans don't have the historical understanding that Europeans have. I'm European, so I learned European history. So you have Constantinople, that was the head of the Roman Empire. And when that city was burning, and that was the end of the Roman Empire, They were discussing for weeks if angels were masculine or feminine. And that's how they went under. And this reminds me a little bit of that historical event. We're discussing now these things. We might discuss also if it's politically correct to say if angels are masculine or feminine. In the meantime, the world is burning and we don't pay attention. So it's very interesting to see how everything comes back based on cycles.
Another thing you predicted was that you weren't worried so much about the Middle East, at least at this point. That's back in 16. But you said, oh, Asia, big deal. Oh, big deal. China,
Right.
Asia, big deal. What's going on? Give us your read now on what's going on in the Middle East. Do you still think that's simmering? And what's going on in the Asia, the South China Sea, China, Korea, Japan, all that. Tell us what you think is going on in the war cycle.
Well, I think a couple of years ago we talked about war cycles, that wars come in cycles, and how that works. Well, it seems that there has to be a certain amount of time between wars that people forget how bad it was, so they can start a new one. I sometimes watch here on television, and they go and talk to the guys on the beach. They don't know who the Second World War was about. I saw it yesterday. They think it's about the North and the South. They don't have no idea about anything. So then it happens again. So a couple of years ago, we talked about it's not going to be the Middle East. It's going to be China and the islands.
Correct.
And I made the observation that I look at the aerospace industries in China, Vietnam, Japan, and they're going through the roof. So something is cooking over there, probably also Korea. And I still think the whole thing is coming from there. It's just an accident that has to happen. So that could be a reason why markets come down. Listen, we never know why markets come down. We can rationalize it, but it will be so easy, then everybody will be on the right side of the market. So something unexpected is going to happen. That happened, by the way, in Brazil, which I sent out on my research today. You know, there was a big story about the new president of Brazil also being accused of a lot of corruption, and the market came down big. The interesting thing is I sent out a few days ago a chart of Brazil, a long-term chart, and I drew a trend line through the tops of the last 10, 15 years. And behold, the market was exactly at the top when this news came out of the corruption of the president. And of course, they say that's why the market comes down. I say it came down because it was at a trend line. Now, both can be true. The interesting thing is the news comes out right when it's at the trend line and the market needs a reason to come down. So why is the market coming down in 2017? I think Mr. Sheeler, which I really think is a great guy, and other people, we don't know. Anything unexpected is going to happen. And one of the things is that wars will get out of hand.
Yeah, we just sent another third carrier group to the Korean Peninsula. Donald Trump, they had leaked out secret information on Trump that he had some, basically he was inferring state-of-the-art submarines. Beyond the submarines that go with a battle group, a carrier battle group. Is on near the North Korean peninsula. They are sending out yet another ballistic missile tests. They have satellites that can give us an EMP attack over here in America. And so you're saying that is that part of what you see simmering here? You have Tillerson or Mattis saying, I think it's Mattis, Secretary of Defense saying that a war would be catastrophic. I mean, is this when you're looking at the markets? I know you're looking at everything. You're like Bruce Lee, training every muscle in your body for a fight. And so you're looking at the markets and your trend line, but you're also looking at the geopolitical. When you look at what's going on in North Korea, is that something that is a pin to prick something at the top of the trend line in North Korea and a war over there?
Well, it's time for the war. We discussed many times that there are many cycles, and one of the cycles was the 100-year cycle. That means in the middle of every new decade of a new century, there's a major war. Going back to 600,000, this is the year 600. They said people can Google it. Major war around 700, 800, 900. So it's every time. It's one of the secrets of cycles. I don't know why it happens, but that's what it is. Now, I know as much as you do and other people know, I don't think there's any clean way of getting North Korea under control. Like, I don't think there's any clean way of keeping United States safe if most of the people don't understand that left and right they're blowing up Europe because there's so much uncontrolled immigration, and here they go to court because they feel sorry for all the terrorists who want to come in to blow up the United States. There's no hope. This is why I said when Constantinople was burning and the end of the Roman Empire, there was discussing if angels were masculine or feminine. It always comes down to sex when you're at the end of a civilization. We're simply at the end of a civilization, and people cannot do anything because they cannot open their mind and see what's going on over here. So I see absolutely no solution.
Yeah, other than war, so people understand. And I remember this because it's what you say is very enlightening, and it's that people know the truth when you hear it, right? And when you said this, you went, listen, the things that happened in the '90s, in 2002 or three with Iraq and the Desert Storm and all that. Those are small wars. That's not what I'm talking about. That's a blip on the radar. Right. You're talking about
like I said.
Explain what's the magnitude of the war coming that you see.
Well, all these wars didn't even show up on my radar. They didn't show up on my cycles.
Iraq, Afghanistan, things like that.
Did not show up. So, by the way, I want to make an observation about this whole uprising of the Arab Spring. Let's not forget, and I'm sure nobody forgets. Excuse me. That the origin was the high wheat prices in Egypt and Tunisia, and the social unrest because of that. Which means is you can never predict if something like this will happen politically, only if you can predict high wheat prices, and then still you don't know what it leads to. So things come out of an unexpected corner. You simply don't know it's coming, but you don't know where it's coming from.
And the order of magnitude, when you say that, places like, what we did in Afghanistan and Operation, the Surge and the first Gulf War, the second Gulf War, you're saying that doesn't even show up on your radar because
right.
It's because of the body count. Will you talk about the enormity of the war you see coming and give us some reference to it so people will understand what you see in your cycles?
Well, let's go back a couple of hundred years in the middle of the first decade of 1700s. There were the Habsburg War in Europe. Casualties. Then we had in 1814, 1850, we had Napoleon, more casualties. Then we had 1914, 18, leading to the First World War, and then leading to the Second World War, even more casualties. That's how you should think about it. And now in the middle of 2015, 16, 17, should be even more casualties, because it's like a market that goes up, but fundamentally you understand that weapons are more dangerous in every century, so of course we're going to have more casualties.
You're talking about you're fearing, let's just get it out on the table, you're fearing nuclear war. The next confrontation will go nuclear?
Well, I think the terrorists will go nuclear within the United States and Europe, and we will not know what to do. I don't think the countries will go nuclear. I think they will give it to the proxies, to Hezbollah, to Hamas, whatever. I don't think Iran will do anything. They will give it to the other guys, and they will blow themselves up with nuclear stuff in the big cities in the United States. And who knows what to do? You don't even know until you know who did it and where it came from. It's already too late.
And what about North Korea? Do you think North Korea could shape up into at least the beginning of a war that could knock the market right out of its saddle onto the ground?
To tell you honestly, I know as much as you know. I can't tell anything more than average people know.
So, but the next war is going to have a World War I, World War II body count attached to it, is what you're saying.
Yeah, correct.
And so, what would you do? What would you tell your family members to do? Would you tell them to, hold some cash, buy some coal, get new tires on your car? I ask this all the time. People say, what should normal people do? Would you buy Bitcoin? Let's start with that. Let me back up. Bitcoin has been going crazy. It's to now, 7 months, 4 months ago, it was, I don't know, $600-700 a quote unquote coin, a unit. And now it's 22, 23, went up to 24, 500 or whatever, and went down. I mean, it's going all over the place. What do you think of the cryptocurrencies? They're all going crazy.
Well, first of all, I don't have enough data. It's like some Christians came to me and asked me, when is the Messiah coming? I said, I don't have any data. I mean, I don't know how many times he came or he didn't come, so I don't have any data. So the data are not there long enough I just fear that there will be an end. The countries will get to an end of it, and people don't know how to get the money out of it, and the whole thing will collapse. It's too simple way to become rich. It's a little bit like the tulip mania in Amsterdam, where you could sell your house and buy a tulip that actually had a value of let's say €1, but you sold your house in order to buy tulips because next day will be higher. But again, I said I don't have enough data to make a projection of cycle highs and cycle tops and how high it will go.
You wouldn't be a buyer at 2,000, 2,200, whatever it is right now, Bitcoin. You wouldn't be a buyer.
Well, I'm like this a little bit like Buffett. I only stick with what I know. I know what I don't know, and I know what I know. It's more than enough what I know, so I don't have to go in deals that I don't know.
So you really don't have enough data on Bitcoin, but you think at some point it blows up and people won't be able to get their money out of it. Is that your projection?
Because if you look on the chart, it starts to look like a blow up, and a blow up usually collapses totally.
Okay, and then what would you tell people to do? Would you be a holder of gold coins? Would you have buy food? Would you have cash? I mean, what would you tell if you just want to have some insurance as to, okay, we know a calamity's coming. I don't know what's going to touch it off. North Korea, some terror attacks, something. The market's going to crash. Could seize. You're saying that the markets are going to close. They're going to seize up. What would you tell people to do?
What I tell people to do is buy small apartments, rent them out. The price will go down, but in 5-6 years it will go up again. At least you have something. Even if the financial system doesn't survive, you have something, and you have some income in the meantime.
And so you would just buy apartments to rent out, even though that you'd pay $500,000 for it, it might be worth $100,000. You still end up with the apartments. What you're saying? Right,
because if you buy bonds, they go down, and probably the return you get on the rent of apartments is higher than you get on your money in the bank, and they're really going to come back in a couple of years. Otherwise, you have no world left. So at least you save your capital, and okay, save a little bit more, a little bit less on your balance sheet, but you get your money in the end.
And what about gold and silver? Would you hold as a hedge gold and silver in your portfolio? Would you hold that?
Well, then I would tell people, why don't you look at our research, because this is really a matter of timing. I could tell them to buy gold now, but if it goes down $200-300, my experience is that people who buy and says, I don't care because I'm there for the long run, sell it at the lowest price because they can handle a loss of $300. Otherwise, I would say just hold it. So you have to know in next year when to buy it, and then you have a nice run. But you really have to time it.
All right. Well, Charles Nenner, we're losing a little bit of our internet speed there, but everybody caught your words. Everything's great. This is Charles Nenner we've been talking to. Charles Nenner, the great cycle market guy, geopolitical and financial cycles. CharlesNenner.com is the website. Charles Nenner, thank you for joining us today on USAWatchdog.com.
Talk again.